Hello, this is Justin, and this video is about why the stock market will recover from the recent coronavirus scare. So first of all, I think people have overreacted to the coronavirus, and as with all epidemics are temporary. Think about the swine flu, think about the Ebola outbreak, think about the huge influenza outbreak in 1918, which was one of the biggest outbreaks of all time. So all of that is temporary and eventually it will go away. So I think that companies don't lose 10 to 20% of their value just because of a epidemic, because epidemics are temporary, and 10 to 20% is crazy. And stock markets have been reflecting that. They have been showing companies lose 10, 20, even more percent of their market value, which doesn't really make sense, because I don't think their inherent value decreases by a fifth just because a few hundred people in America have the coronavirus. And I think recently, the most recent article I read about the coronavirus in America is 500 people have the coronavirus, but there's 300 million people in America. So I just think it's overblown. And also, if you put into perspective, the whole world, there's more than 7 billion people in the whole world, and a few thousand or a few tens of thousand have it, which is less than 0.001% or something like that. And it is out of perspective. And yes, current numbers do not indicate future cases and how future numbers will be like with how many cases there are with coronavirus, but you can just look at China, where coronavirus originated. Now there's even fewer cases of coronavirus than there were in the past weeks. So that just shows that in China, where the coronavirus originated, there's already a slowing down of how much it's spreading and a decrease in the amount of cases of coronavirus. So in addition to that, if you do the research and really look at the patterns of epidemics, warmer weather, which is coming soon, kills influenza-like outbreaks like coronavirus. So it's only going to be better as the weather gets warmer. Moreover, vaccines are being developed very quickly. The companies Gilead and Moderna are already developing vaccines and treatments very quickly for coronavirus, and that is just going to make it so much easier to treat, and it's going to kill the outbreak sooner or later. And lastly, governments are taking very, very swift action with quarantining and also investing in treatments and vaccines. That's going to be, I've never seen such swift government action with an epidemic. I don't think there was something similar with Ebola or the swine flu or the SARS virus, or even the influenza outbreak in 1918, which was huge, and that affected a quarter of the world's population. But again, it died down because all epidemics are temporary. So that is why I think the coronavirus is overblown and the stock market overreacted to it. And I don't think companies lose 10 to 20% of their inherent value because of it, even though that's what the stock markets reflect. But moreover, the U.S. economic fundamentals remain strong. If you look at the data, the unemployment rate and the job creation rate, the fundamentals remain strong, and the Federal Reserve is also taking action to support the economy, which is very good. Moreover, if you look at the 2020 election, it seems pretty good for the stock market, because it seems like we'll have Donald Trump versus Joe Biden, both of which are good for the economy. Now, if Bernie Sanders wins the nomination, which doesn't look like that will happen, then that would be very bad for the stock market. But it seems like Joe Biden will win the Democratic nomination, so it's either him or Donald Trump, and both are good for the stock market. So overall, the picture looks good. It's just that now we have this downturn because of the coronavirus scare, and I think people are overreacting. And if you think about it, markets are cyclical. There's always a upturn after a downturn. There's always a bull market after a bear market. And right now there's a bear market, there's a downturn, and it's going to go up because markets are cyclical, and after it goes down, it goes back up. So I would recommend you start buying stocks now if you aren't invested in stocks, because this is an amazing time to buy. Prices are undervalued, people are scared, people are panicking, and stock prices are going down. And when the stock market recovers, which it will, you will make a big profit. So thank you for watching. I hope you enjoyed this video. Like, comment, and subscribe, and hit the bell notifications, and follow me on Instagram where you can DM me, and follow me on Medium where I write about the same topics I talk about on YouTube. Until next time.